All right, gang, follow up from Stuck in the Middle with you. We had the moving average crossover phenomenon that occurred, a really strong buy signal that we put out to you guys on Tuesday morning. And that is something that I expressly had created back in, I don't know, 2009 on Genesis. I'll share that with you, but also on our trade station platform. The algo strategy has been long, still long. Spider. As you can see, we are also in a short VXX 60 minute. That's very supportive from yesterday. So those are really nice positions. Crude oil generated a nice little short, got out of half the position. Gold took a nice short today. I mean, just nailed it right on the head. Scaled out of half and trailed the balance, and now it's kind of flat. British pound, what can I say? It tries to generate trades. We have only one reason why I'm using British pound, Brexit coming up, and so we'll see what happens. Today we haven't had a whole lot of action in the S&P model on the 15-minute because most of the action happened overnight. The 5-minute model, just to give you an idea, the 5-minute had a long, had a short. It missed the rest of the move because it was in a trade, and then by the time it generated a new fresh buy signal, the risk was too great. But I'm glad it made some money again today. We don't care. It's a day trading model. Moral of the story, I'm pretty bullish, as you can tell, and I don't want to post and promote something without my explaining it. So by the way, let me go back here and fix some things here because this is our live. I'm infringing on the live trading room, and I just want to make sure if you do ever come visit our live trading room and take a test trial, you would see this exact page with the positions on the charts, the positions listed on the strategy manager tells you where they're in, and again with my commentaries pre-market morning briefing. So right now we have in the S&Ps a very extremely expressly strong day. 462 in the S&Ps are positive in the advancers versus 33 decliners. All right. Part of what we talked about in the trading room yesterday, 828 at 349. Notice that it's not at in the morning. It was closer to the close. We had notable daily buy signals in LK, IBM, and all the regional banks. Plus, we are also talking about a couple positions and a kind of we had a huge exit on a monster trade in crude oil a couple days ago. But anyway, what we do is I post these commentaries, and we had stock room. Weekly buy signals were flashing. We put out this yesterday right before the close. 5 and below, which is up, I don't know, close to 9% today, Walmart and TG Maxx. Another one that we did some study with right before the close was Red Rocks Casino. Had a great day. It's breaking out for a weekly buy signal, and we had this in a big trade discussion in the live trading room. Why Red Rocks? Well, Vegas, baby, is got, it's on fire, and this is more of a local casino. I love my boys over at MGM, and everyone knows that, but I got news for you. I think Red Rock's on fire, and you should probably take a little exposure. It's where the locals go to hang out. They've got the Oakland Raiders going into Vegas. You got the the Black Knights National Hockey League, and I mean they're growing leaps and bounds. So therefore, man, if you want entertainment and you're a local and you don't want to go to the strip, it's Red Rocks out there, Red Rocks Casino. So I no exposure to China, by the way. That's good and possibly bad. But again, growth, Red Rocks, RRR, and it looks dynamic on the charts. All right, enough of that. What about the markets? Get back into the main topic du jour. The main topic du jour. The Russell is in a stage to finally break out. We have bullish convergence going on in our volume indicator. This is a proprietary volume indicator. It has been expressly bullish over the last 3 weeks with nonsense in the market. Well, let's go week and a half. There's your bullish convergence. What do I mean? Bullish convergence for new traders. When price trends and makes a newer low, but the volume indicator or any indicator makes a higher low, it's what we call bullish convergence. It doesn't happen at every low, but it does happen at important lows. And it signifies that the secondary low right here was on very, very thin volume. So it leads us to believe that it was just a market attack that went down and got everyone stops, and then it just takes off without you. We identified that and the position that we've taken is via a ratio back spread in the Russell. One reason we did this was because, well, I'm not totally stupid. We didn't have enough volume coming into the trade. At the time, the advanced decline in the Russell wasn't breaking out, and there's too much negativity on growth stocks right now because of the China connection. But seasonally speaking, this does well in the month of September. So we wanted to play that, and that's why I went with the ratio back spread. Right now, we have something very unique that is exciting that just occurred. The Russell, if it closes positive today, meaning if we close the breadth today and we lock in that rating right there, it's not that we're making and signifying a new high in the advanced decline. No, we've got the short-term moving average crossing over the longer-term moving average. And that, my friends, is a more positive buy signal, just like it's a very, very strong sell signal. When the moving average crosses below the longer term, it's a confirmed sell signal. When it generates a buy signal, it's a confirmed buy signal. When it gives back a crossover and then goes back into the game, it's a buy signal. When we get a crossover of the breadth, it generates weakness. We're back into buy mode right now. That's what I'm referencing. I did this with you the other day in the S&P 500. And if you recall, I stated we've got a X marks the spot, a beautiful moving average cross of the advanced decline. What's different now? Holy moly. If we close here today, again, 461 versus 34. So if computers don't come in, if Chinese hedge funds, and I'm telling you right now, I think there's something to do with the Chinese government, Chinese hedge funds attacking or at least trying to trade our markets and do something. No one's talking about this. It is impossible for anyone to convince me otherwise. How a market in the S&P 500, the most dynamic stock index in the world, within 5 minutes last Thursday is doing great, and in the last 5 minutes, the advanced decline, 321 was the reading, and in 5 minutes, it went down to 235 on no news. Well, what happened? Why did the market sell off? The S&P futures went down 10 full handles in just that short 5 minutes. It wasn't an earnings report. It wasn't a tweet from President Trump. It was nothing. What happened is Friday morning, before the market opened, the Chinese government announced they were going to enact a 10% tariff. Somebody knew, somebody came in, and somebody hit the market. That has not been talked about in the media. You should probably ask people, hey, and I mean the right people, congressmen, senators, why is this market moving like this? And why isn't the SEC looking at who's driving this? It's not regular market activity. And if you look at the suspiciousness of how it sold off, when it sold off, and the news that came out the next day, I think you would agree it is pretty tricky. So now, what would be in China's best interest? If I was long bonds, for example, in the U.S., and I bought them cheap, I need to create demand so everyone else buys them from me and I can unload them. What's the best way that we could create demand? Maybe, why don't we stir havoc and fear, and maybe we could drive people out of stocks and into bonds, and when they go and flock to buy bonds and flock to buy real estate investment trust and flock to buy all of these interest rate products because global rates are going to zero, we're deflationary, blah, 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 we can sell them our bonds. Now, I'm not saying that is the case, but it sure does make good, interesting fiction reading, right? But I think there is something a little to the degree there that we need to recognize. So anyway, I don't want to be the conspiracy Charlie guy, but I will tell you this. It is starting to feel that everyone was expressly bearish the market just a few days, hours, minutes ago. We've been kind of saying, hey, this was a kind of a bad sell-off, but it wouldn't go down. A market that generates a sell signal that won't go down on depreciative technicals is not expressly bearish. What do I mean by that? Market broke down, but the advanced decline did not break down. In fact, here's another interesting component, which is why we've not really been selling these breakdowns and getting trapped in what I call the bear trap, is that on each, if this is 1 and that's 2, and that's 3, right? I mean, they're all pretty much very similar levels when they sold off. Red candle, sell signal, even a sell signal. If you look at that, look at the advanced decline at the corresponding lows. They each and every one have made higher ratings. So it was more cap weighted, more index weighted selling, and not overall stock market selling. That to me is very important. And with a new high reading in the advanced decline with a moving average crossover, this pretty much improves odds. I'm going to go 77% chance that we go not just to test the highs, that's a give me, but possibly to the newer high of, again, my numbers are around 305-307 for the spiders in the next few weeks. What could do that? If Friday, today's Thursday, if Friday we close positive, if today we close positive even, then that tells me that this market, and I mean not just positive in price, but positive in breadth, that tells me we're going up. And friends, here's the key. While maybe not buying it right this second, wait till the close, wait to see if this locks in positivity, and then look for a little pullback in the market. You got a 3-day holiday week, but you want maybe upside exposure. If we do go to, let's say, that 306, here's what I told our trading community, and I'll wrap this up. I said, listen, guys, if the market goes and tries to test just the highs, I mean, all right, that's 301. I mean, that's a lot of profit right there, right? So look for confirmation. And even if you only get a chunk of the middle, it's a high probability trade that you'll make money, okay? So that's number one. So targeting that level is great. If the market goes down, sideways, back up, and then has some kind of a positive reaction and finally gets back to test maybe 305, 307, one last hurrah. And why would I say it would do that? If we close with a greater advanced decline reading and a new high reading in advanced decline. But lastly, friends, if we can break out and get a new high reading, not just in the SPY, but also, again, in the Qs, which it looks like we're doing, and if we also do it in the large cap, high dividend, expensive to all out stocks in the Dow Jones Industrial Average, that's very positive. And for all the older technicians and the people that don't know any better, if they look at the advanced decline in the ticky and they see it rising here in the nice, that's very, very strong and positive. All right, now, let's wrap this up. Dow Theorist, IYT, transports. Look at the transports, and what are we doing there? Well, my indicators, PMC is not doing a lot of anything. The ATR is neutral. I don't look at that as a directional trade, just as a kind of a market condition situation. But the IYT, the transport sector, is starting to get liftoff. High close doji, doji over here, high close doji, PPS buy, last conditional trade. This is breaking out of resistance. Volume trends are doing better. The relative strength is improving. It's not turned positive, but this would help support Dow Theorist if we get follow through in the transport. So let's take a look at how I use my indicators and why did I create them like this. I could double click and say, what is the volume readings? SPY, the average volume over time, I don't want to divulge all my secrets, 67 million shares worth 35 with 2 hours to go, light volume. Dow Jones Industrial Average, let's get down to the diamonds, 2.9, 2 hours to go, we're 2.8, so that's pretty good. Now, let's look at the topic that I was just on, IYT. It's not a very expressly major trading ETF. 272, we're at 154. So we are well off and not seeing the type of volumes that would give me that love feeling, get in this thing right now. We haven't seen the volume yet. Now, what I would say is simply this. Strong breadth today on the close. Strong breadth tomorrow by noon. By 12 noon tomorrow before a 3-day holiday weekend. I don't know anyone in their brother. This you'd want at least long call exposure into the market. Thank you for watching. Sorry to take so much time and beat this over and over and over again, but I think it is something that we use logically interwoven indicators together to help make better trade decisions and navigate, because you can't trust what's going on in the news. I mean, if you voted for President Trump, you're probably sick to your stomach watching CNBC, because all they do is just parade anti-Trump haters and people talking about negative, negative, negative. If you watch Fox, then my God, I mean, it's ridiculous. Everyone's promoting their own agenda. My agenda is to make money for me and not to lose money for you, as well as to introduce you to my set of indicators and style of trading that has worked for me for over 38 years. We didn't reinvent a wheel. We modernized tools, and that's why we've put together what we have. Not just the way we look at the advanced decline, how we break it down with the different stock indices, and more importantly, how we take advantage of that by using this program, the Algo 17 strategies, and how we use it to make money. It's pretty fantastic stuff. So if my old saying is, if the VIX is going down and you're short, your system is short, and the SPY is going up and the system is long, and you think it can't go any higher, don't be selling short. Wait till that system gets out. But on the other side of the coin, if this thing is breaking out and it's got great volume, you may want to join this trend. This could be the real deal that finally breaks us out of this trading range. And what is that real deal? I'll share it with you right now. The volume is creeping up the highest we've ever had over time, and the breadth of the market has led higher for the very first time. And that's the structural difference between why the market failed here, failed there, failed here, failed there, failed here, and has not been able to rally. We have something different. It could fail, but the odds are improved that this could be the real deal. Watch for that. Thanks again for watching.